And now investors are looking towards this Friday and the June jobs report. For much more on how the markets are moving, even in the early hours of this morning, I want to bring in Rebecca Walser, who's the president of Walser Wealth Management. Rebecca, good to see you this morning, and thanks for taking the time. We are coming off of a solid week. What's driving these markets from your perspective?
Well, obviously the infrastructure deal, the last week, what really, everyone was like, oh, great, we're going to get another deal. And this is great bipartisanship, which we haven't seen. It's a rare thing in Washington in this political environment. So I think that really boosted the markets, let us know, okay, the government's starting to work again. The economy's going to work again. And that was really great to see. You're seeing a pullback now because there's been some rumblings over the weekend about the fact that the infrastructure deal people might be backtracking on both sides because of other things that were being added after the fact. And so you're starting to see a little bit of, oh, is it happening? And then we've got the big June jobs report number on Friday that we're also really anticipating. So it's a lot of stuff going on, and we're just trying to get back to some level of normalcy, Brad, and that's always going to take some time.
Certainly. And so let's stay on the jobs front for a second, because if we look over the past couple weeks here for the jobless claims that have come in, they've missed expectations and just a little bit worse than expected. And so what do you expect now coming into this June jobs report, specifically as it relates to the employment situation and when we think about wages and what that means as well in terms of the broader inflationary picture? What are you going to be watching for?
I'm thinking that we're going to have a little bit of a miss like we did in May, but I am very encouraged because we have 22 states now, 25 that have passed it. We already are seeing a 5% reduction in unemployment for the states that had a June 12th roll-up. There were 5 states that had a June 12th roll-up, and they already had their unemployment drop over May over almost 6%. And then you've got states that are rolling off in July, and we're talking about that extra federal $300 a week that's rolling off voluntarily. Some states are saying, no, we don't want that. You're seeing that the ones that are rolling off in July, they have already decreased their month-to-month unemployment numbers by 10%. The ones that are waiting until September, they're basically the ones that are still having the larger 13% level of unemployment. So I'm encouraged, Brad, because I do think that some of these, half of our country making these moves to get people back to work, when you pay someone more than they might be making, or you're giving them an incentive to not find a job, and we have over 9 million jobs available, that's not going to help the economy get back to work. So it's good to see that these states are seeing an increase, and of course we're getting really close to September, so I think overall we're heading in the right direction.
How do you expect the markets will trade on that event? In the past, some of the context that we had seen is that if it is a number that's worse than expected, then the markets had even started to edge higher a little bit on the expectation that there would be more of this accommodative environment that we would continue to see. And so how might the markets move based on the number coming in one way or the other?
Well, I think it will help also with the infrastructure deal, and we'll get more clarity around that because I think that people do want to see a little bit more stimulus still, even though we're still buying, $120 billion a month at the Fed level, $1.3 trillion a year. But I do think if the market sees another miss, it's exactly what you said about like what happened in May. We'll expect, okay, well, this is just to be expected, and we didn't quite get it exactly right on the numbers, but the market is still going to be very forward-looking right now. And there's a lot of things that we're seeing with the predominantly producer price, the PMI. We're starting to see that come up, and we have some supply shortages, but we're starting to see that will shift. So what's coming back now are the purchases of goods and stuff, and what we'll actually see is once we get back to going back more towards normalcy, services are going to come back in. Of course, we are 70% consumer service driven, so that will really help. So I think the market's going to be very forward looking on this report, but I don't expect that if we miss, which I expect we will miss, that we will have a huge pullback.
All right, 675,000 jobs added is the expected number that we've seen out there. Yeah. Switching gears here, while we have you, Rebecca, concerns of cryptocurrencies, over cryptocurrencies specifically, are mounting after regulatory concerns in both the UK and in Asia as well. Bitcoin is well off of the highs of nearly 70,000. Your outlook for crypto, as this has become something that even, those of us who typically would have spent most of our days talking about equity markets or commodities and everything else of the like, we've had to keep an eye on crypto now because there is annexation to some of the equity market companies who either hold it on their balance sheet, Bitcoin specifically, or offer some type of Bitcoin or crypto platform play that the broader markets also have to take consideration of.
Crypto is going through a transitionary period, Brad. So I always knew this would happen. I basically have been saying for years that as an investment, I think it's a great new dynamic. I mean, the platform, especially on the Ethereum side, of the programming and the if-then logic, not to get too technical, but there's so much opportunity. But the problem with crypto is that we really don't know how it's actually going to be treated. And so what you saw is mainstream basically being pulled into crypto through these, offerings on Wall Street that you can actually have it in your portfolio. And also, even like Elon Musk coming out this year and saying Tesla was going to accept Bitcoin. Now, obviously, they since, took that back. But I said the more mainstream this goes, the more it is acceptable as a currency, you're going to see central bankers and governments get involved. And in fact, this is what is exactly happening. You're seeing that the Biden administration has come out and said, they might require large currency transaction reports to be filed. You saw the IRS just within the last 2 months say that they could potentially confiscate your crypto. So people are starting to say, wait a minute, is this going to get regulated? You're seeing all of these, cyber attacks where they are paying ransom in crypto or specifically Bitcoin, and then the feds are coming out and the FBI is saying that they retrace that. I need to see more of that data because that doesn't actually resonate with me on the blockchain. It's really, you can't reverse engineer, so I'm not exactly sure how that's actually happening. But to your point on Asia, this is a perfect example of what could happen in the United States. So basically, China has decided to come out with their own version of digital currency, and so they have kicked out all of the actual crypto miners and specifically Bitcoin out of China. And so that's what you're seeing is when a government decides that they are going to, and of course we're not China, we're not communists, and they're very different, right? I'm not saying that would happen here, but this is what's happening. If a government decides to get involved and sort of take over and start to regulate, then all of the things about decentralized blockchain technology that we all love so much because trust is not a factor, it is verifiable at all sides. That's the issue. And so, Brad, this is a very transitory time. I think crypto and blockchain distributed technology is the future. It is what is coming. It is not going to be stopped. But the government is going to have to figure out, especially the central banks of the world, how is this? Is this an investment or is it a currency? Because that is a huge, huge difference.
And so for investors that have already taken looks at either Tesla or Square or other companies that have their own small pile of Bitcoin or cryptocurrency that they hold into, what's the best way to evaluate them right now?
I think that they're on the forefront. We're going to have some growing pains here. We absolutely are going to, just for all the reasons I just explained, it's not going to be a smooth trip. And if you ever thought that it would be, moving to, electronic currency is what we're talking about, from, paper currency, and everything is tracked and there's specific regulatory authorities. And we're really talking about the disintegration of banking, even potentially, just so many applications of this. Brad, we are on the forefront of it. I know a lot of people think they're late to the game. You're not late to the game because it is going to be a completely different industry in 10 years. But certainly these early adopters are going to be, I think, rewarded. And I'm not saying it's going to be easy, and I'm not saying it's going to be a straight shoot up. People should expect high volatility. It is a very, very high volatility asset holding, and people should be prepared for that. And if you're not prepared for that, if you're a conservative investor, then potentially this is not the way to go for you.
Yeah, and just to kind of clarify for our viewers as well, it is, 0.02% of their total market cap for
exactly
compared to Tesla's market cap,
Absolutely.
their Bitcoin holdings. So, it is a small portion of their value. Rebecca, always a pleasure to speak with you, and thanks so much for joining us here this morning. Rebecca Walser, who's the president of Walser Wealth Management, joining us today here on Wake Up with Cheddar. Everyone.